The Apartment Gurus podcast is brought to you by Greenlight Equity Group, an apartment acquisitions and holdings firm co-founded by Carl York and Tate Siemer, host of this show. We offer you the opportunity to be an owner of cash-flowing, wealth-growing apartments without the headaches of being a landlord. These assets are recession-resistant, risk-mitigated, offer significant tax advantages, and are a great alternative to the stock market. Ready to check it out? Go to www.investwithgreenlight.com today to book a personal consultation with Carl or Tate. Again, that's investwithgreenlight.com. We look forward to meeting you. Welcome to The Apartment Gurus, where twice a week, host Tate Siemer brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Siemer and the Apartment Gurus.
Welcome, everybody, back. Another episode of the Apartment Gurus podcast is here. You're listening to it right now through the wonders of technology and digital information age and all that stuff. And really grateful that you joined us today. It's a beautiful, sunny, late summer day again here in Utah, which is a very sunny place. Being from Cincinnati, Utah is just remarkably sunny and dry. And we just closed on our Lawton, Oklahoma property, our 52-unit heavy value add in Lawton, Oklahoma, in the Greenlight Equity Group did. Myself and Carl York are the primary partners in Greenlight. And we have a deal in Columbus under contract that we're doing a webinar for this week. And we have a deal in Oklahoma City, Norman, Oklahoma, that we're also doing a webinar for this week. So we're very busy here at Greenlight headquarters, where I'm zooming in to you from today. So just a couple quick updates for you to keep you in the loop. Multifamily Octane members are kicking butt, getting deals, raising capital. And so if you want to know more about the mastermind opportunity with Multifamily Octane Mastermind, if you are serious about this business, not just curious, you will want to check this out. So email me, Tate at glequitygroup.com about Multifamily Octane Mastermind. So on that, I am really excited today for our guest, Mr. Wayne Courreges III. Is with us today, and Wayne is based in Central Texas, and he is a lead sponsor and a GP, basically a lead GP, if you will, on multifamily syndications and build to rent projects, communities. And he started his real estate journey almost 20 years ago with his first rental unit while serving in the U.S. Marine Corps. By the way, sir, thank you for your service very much. And after completing his service as a Marine Corps corporal in 2007, he started a career with a Fortune 125 commercial real estate firm, and that's taken him through the last 15 years. So you're still working for that real estate firm, Wayne?
Yeah, we left. So I was able to transition from that career this year. So we're now full-time real estate investing.
Yeah. Cool. Definitely want to hear more about what that 15 years of experience got you. But he has a background in commercial real estate. He has a passion in leading teams and a desire to increase his investors and teams' wealth. And that pushed him to start CREI Partners in 2019, which has $33 million in AUM, or assets under management, in both Texas and Louisiana. And he's raised a couple $1 million in capital so far in 2022. So I know you've been cranking in 2023 here as well. So Wayne, dude, welcome to the show. Really, really glad to have you.
Yeah, I'm excited to be here. Thanks for having me on. Hopefully add value to the listeners.
Yeah. I should also mention this is becoming a common theme, but Wayne is also he's obviously a colleague and a fellow investor, but we're both members of the Raise Masters Mastermind by Mr. Hunter Thompson. I've mentioned that before on the show, so I won't go too deeply into that, but basically just a very powerful group of capital raisers that are up to big things and partnering and finding deals, finding dollars, putting it all together, making it happen. 430 people in this group. So it's quite a network. And so I'm getting to meet people like Wayne through it. I've had, Mark Updegraff on the show and a couple of other fellow members as well. So that's another thing that we can kind of talk about. It's the capital raising is really the theme of the year at Greenlight Equity Group. So it's something that we're working on all day, every day. So Wayne, dude, first of all, are you from Texas originally?
I am. I'm born and raised in Austin. I live out in the Bryan-College Station area. But Austin is where I was born and raised, and we primarily focus Austin, San Antonio, Houston. We've got a property in Lafayette, Louisiana. Recently closed on a deal in Huntsville, Alabama, and we're developing a RV boat storage as well in Bryan-College Station. So we've been busy, but primarily stay in the South East and Texas.
Mm-hmm. Perfect. So, what were you doing for 15 years for the commercial real estate firm? Talk about that a little bit.
Yeah. So right out of the Marine Corps, 2007, joined CBRE, major commercial real estate investment and groups out there. Yep. Outstanding experience. I wanted to get more on the development side when I first joined CBRE. But they sold me on, they had like this wheel where, you can start here and go to different places. So what I ended up starting out in 2007 was in property management. So over the last 15, 16 years, I was managing trophy class A and B office, retail, and some industrial, but primarily class A office. Mm-hmm. So I was in the Washington, D.C. market for about 5 years, was in Houston for 5 years, went to Austin for about 5 years, and then ended up back in Houston for a short period of time before I decided just to go all in on my real estate investment company that I started in 2019. But as the bio that you mentioned, been in real estate about 20 years, from starting off with single family when I was in the Marine Corps, purchasing rental properties, and just moving forward to where I am today.
Awesome. So my dog Joey's chiming in, Wayne, a little bit here. He's excited about your story. So 2019. So just to back up for a sec, for those 15 years, Washington, Houston, Austin, and then back to Houston. Did you say you're primarily in management?
Yeah, it was primarily in property management. So heavy on the asset management, property management side. So when I went into real estate investments, mostly focused on multifamily, I didn't really have to learn, per se, income statements and budgets and renovation plans and how to, work through repositioning an asset, because I had that experience through, my W-2. So, so in 2019, really was having a moment of like, do I continue on with CBRE because it was such a great company and I really did have really great clients and experience, but there was still something pushing me to do my entrepreneurial path and also find ways to grow wealth for friends, family. I was doing a lot of it for institutional type clients. Yeah. So switching to more retail people, like you and I who, want to grow our wealth through real estate investing. So at that point, I started CREI Partners, again, focused on multifamily, got into a mentorship program to learn more on the underwriting and have easier access to their vendor partners, et cetera. So that helped, scale it a little bit faster. But, my whole background, my whole career has been heavy on commercial real estate management. And it's one thing I pride myself and our company on is, we are heavily involved in all of our asset acquisitions. We are not typically raising for other capital partners unless we are involved in the asset management piece. Yeah. And it's, something that's really important for us. So typically we do 2 or 3 deals a year. And, again, just because we're so hands-on and just enjoy really the repositioning. I enjoy the start to finish of the project and being heavily active on it.
Yeah. So you're not in-house management. You're just heavy on asset management. Is that correct?
Correct. Yeah. I like the third-party property management for several reasons. One, it keeps arm's distance between ownership and the management piece, of course. But with property management too, it also depends on the scale and the size. I like that I can, one, use my time more on asset management and finding deals and building relationships with brokers, et cetera, while the property management, who really are the experts of what they do day to day, and then have the resources within their company between accounting, maintenance, and of course the property management regionals, et cetera. They have the scale to better support, our properties and our markets. Right.
Yeah. It's like hire the seasoned, very professional pros to do that job. Right. Now I do think there's an awful lot to be said for going vertical at some point in your progression. But I think that's it's something that requires a fairly decent sized portfolio to, in my opinion, to make it worth it. Because like you said, you're leveraging that third party again for a number of reasons, but one of those positive effects that you just highlighted is that you get to go back. You're spending your time on your broker relations, on your acquisitions, on your underwriting, on your due diligence, on driving the company from the front. And of course, asset management, I'm sure, is a big piece, but that's just that's the whole idea of scale, the whole idea of buying institutional grade assets that you can get good third party management for. And I think that's a important distinction. I'd love your thoughts on this, but for what we learned kind of the hard way, actually very much the hard way, is that, C- type properties come with C grade, C level property managers. And that's what you got. You're not going to get an institutional class A or even class B property manager to manage a 70 unit class C- in a bad part of town. So, this is huge for us now that we consider when we're underwriting assets and qualifying them, we're considering, okay, which of our property managers is going to be best suited to take this asset on. And, we're pretty much class B, class A buyers these days. We'll look at class C deals, but have you noticed that too? Different levels of quality in terms of property management at different asset levels?
I think ultimately each property is its own business, right? You got you're like us, and we're buying, say, C, B properties. I know you said A and B. We focus more on C and B with the focus of heavy value add renovation process. So part of our business strategies is to bring in a more professional, seasoned property manager. Especially, it's even more needed because of the heavy lift on a property that has more of the second, third chance type residents. And so having that more experience. So what happens is we pay a little bit more, right? Mm-hmm. So we pay more for that manager. One, for retention, but also because it's going to be a heavy lift, and we want them to, we want them to stay and be willing to go through that heavy lift. We also incentivize our targets, and we can definitely go on that path if you want. But we incentivize KPI and revenue expense targets where they're bonused throughout the year. And then we also have sharing of expenses. So when we have properties in scale, we'll try to share payroll between maintenance and management between the properties, which benefits, all of our properties and all of our investors in our markets.
Do you have kind of one property manager doing all your properties, or do you have different managers for different properties?
Yeah. So the ones that we are lead sponsors on, we have one primary management company. And the reason I like doing that is it gives you more clout and more leverage, especially on properties that have smaller unit count. For example, we're under contract for 44 units. And if you just had 44 units with one management company, and that's okay to start with, but it's just over time you build up a number account where, again, you're able to have the split focus between the management and the maintenance on site, but then you also have more regional support because you are, becoming more tied in, loyal type customer. Yeah. Now, the ones that, we have partnered with other lead sponsors, and again, we stay heavily active on the asset management, of course, but they have other property management companies. So we have, say in Houston, there are two primary management companies that we focus on, and the ones that CREI Partners is truly the lead sponsor. We have, I like to really have my eggs in one basket with this one management company.
Are they locally based company? Are they okay?
Yeah, they're locally based and actually in the submarket that we're primarily buying in, which is the Galleria submarket of Houston. So
got it.
I'm pretty, it's always interesting. People are like, oh, we buy in Houston, or we buy Austin, San Antonio, or whatever city. But with real estate, it's all local, and so even within these cities, we hone in on certain submarkets, with the Galleria being our primary focus in Houston. For several reasons, but that's the one, and they just happen to be based in that same submarket. But that's just a coincidence. So
yeah, gotcha. All right, so switching gears a little bit, how do you source your deals? Where are you? Are you a broker guy, broker relations guy? I think my guess is that you are, since you already mentioned it. But I mean, do you do any direct to seller marketing, or are you just 100% brokers?
No, it's a great question. I do a little mix. My first deal was 101 units in the Galleria submarket of Houston that was completely off market. And we found them through sourcing the true owners. And we can go more into that exact process if that is helpful to your listeners. But we found this property that was owned by a cardiologist in California. And he and I just became good friends over a 2-year period. And he wasn't ready to sell at first, but over a couple of years of staying in touch, checking in on him and his family, seeing how he was doing, eventually he was open to selling. And so we purchased the property.
So he was he a total just no, I'm not interested in selling at all, but let's stay in touch, or was he I may want to sell down the road, or where was he when you started this friendship with him?
Yeah. So I mean, at first my numbers just didn't really tie to his numbers. I mean, he had reached out to me. His big thing was he had refinanced, and so the prepayment penalty was quite large during those years. Now we purchased it last year when interest rates were going up, which meant his prepayment was going down. And so it just, the timing to make it a win-win number worked in that favor. But, this was his baby. I mean, he had owned it since 2007, visited the property, several times a year. And he just wasn't at the time ready to sell it. But it took a couple of years, and he was coming to Houston one time, and I had just happened to call him and check in. And he's like, I'm going to be in Houston. I said, okay, well, I'll come by with a letter of intent. And that's what I did. It was on a Saturday, just drove there, met him, and we negotiated the price, and it was fully off market. So no brokers or anything. Now, I do value our relationships with brokers. Typically if it's on market, truly on market, like once it gets blasted out, I don't spend time on it. I mean, that's just, but if they send me a quote unquote off market deal, even though they're still sending it to a few other people, but at least it's not going to the vast market where everybody's going to be, underwriting and, best and final is, I don't get into best and final. It's just,
even with a deal that, say, the broker took to 3 people, you wouldn't go best and final with those in that situation.
Yeah, I haven't had, or at least they haven't told me that there were others looking. But again, I know obviously their job is to try to source potential buyers. But when you're doing that, when they're coming to you directly, they know you can close, right? You've experienced your ability to close, raise capital, et cetera. So we've shifted gears a little bit more, which I'm proud of over the years, where, when a broker brings deals to us, especially in the beginning, I'm wondering why they brought it to us. Because at some point, the broker is more likely to go with people they have really strong relationships with and they know can close, right? Those are where the best deals go to, right? They go to those relationships and the proven ability to close. So by the time a deal would come to me, especially starting out, in 2019, 2020, even into 2021, I had to be very weary of like any deal that came to me, like, what is wrong with this deal? Almost in a way, you're trying to convince yourself not to buy it because there's probably something, there's a reason why people have passed it, and there's a reason why the broker's bringing it to you. Now, shifting in the last couple of years, I'm still questionable about deals that are brought to me, but it's not as much because I genuinely have good relationships with these brokers. We go to lunch, I'm getting to know their families, et cetera. So it does shift quite a bit. But when you're starting out, especially for those that are listening who are wanting to get more on the active side, if you have a broker bring you a deal, definitely be more heightened alert on it. And again, you can go off market. The brokers are doing the same thing. They've got analysts, et cetera, doing similar type work. So it's a slower game that way for sure. But if you're able to, attempt to do both, I think, definitely be successful.
Yeah, that's really, really interesting stuff. So do you guys have any systems and processes around going direct to seller in place at this point? Do you have active marketing, that sort of thing?
Yeah. So, I mean, I'll give the playbook if we got, time. I'm definitely,
and just to preface, we absolutely have time. And just to preface this, Greenlight, we went direct to seller for about a year. We had an employee that was hired just for that. And we just didn't have a lot of success. And and there were there's some reasons that I suspect were in place that maybe weren't necessarily related to the possibilities around this. Like, in other words, people are successful doing this, especially if you're willing to buy 40 units or 60 units or 30 units, because the mom and pop owners, often are in that smaller asset class. We just decided to go all in on broker relations and let them do the digging, the grassroots work of finding motivated sellers and putting the OMs together, doing all the legwork of the financial analysis and their pro forma and their target rents. And of course, you're analyzing the heck out of that. You're never taking that as fact, but nonetheless, they just do an awful lot of work that you would have to do if you were sourcing the deal directly. So that's really been our path and kind of our philosophy at this point. That said, like I said, if you're willing or even enthusiastic about, let's say the 20 to 80 unit count, then the mom and pop owners can be fantastic. So yeah, I definitely interested in hearing, you're kind of just a quick thumbnail on how you guys go about that, and where you find your success with it.
Yeah. And I think whenever you're buying into multifamily or any asset class, you're really just trying to find the blue seas, find the blue ocean, right? Because when you're all circling the same meat, that's where, likely sometimes you're more likely to overpay. You're trying to, you're competing with other people. The brokers are, they're doing their job and getting the best and final for their client.
That's right. They're always working for the seller. You got to keep that in mind. Yep.
And so on the commercial side, you don't have that broker that's representing the buyer, right? Right. So yeah, just real quick. I mean, for anybody out there looking to get started, and I'm happy to share this because you can share as much information, but the people that actually do this heavy lift will be very few. So if you are one of those listening who actually do this, call me. Let's connect, because those are the type of people I love to get to know, is people who are actually going to do this stuff. But here's
Wayne,
the plan.
what, since you mentioned it, what's the best way to reach you? And we'll go.
Yeah. So Wayne, WAYNE at CREIPartners.com. Also my website, CREIPartners.com. A lot of information, podcasts, blogs. We also have, like I said, a podcast, but we have tons of valuable content through that website. We also have a passive investor coaching program at passiveinvestorcoaching.com. But here's the playbook on it. It's not overcomplicated, but ultimately you want to get a list of properties that meet your criteria. So everyone's going to have different criteria, whether that's city, submarket, number of units, price range, et cetera. You can use CoStar. You can go out and source yourself. But ultimately, once you have that list, take the address, go to the appraisal district website. So for Houston, it's Harris County Appraisal District. You put in the address, it will pop up with the appraiser's information. That information will show a recorded owner. Typically, it's an LLC or an LP, limited partnership type entity. You take that entity name and you go to the Secretary of State for the state that you're, looking to invest in. So in this case, Texas Secretary of State website, you put in that recorded owner, and then from there you will be much more likely to find a true owner. So you'll find individual names that are behind that LP or LLC corporation entity. From there, we use sources like Been Verified. It's a website through Been Verified, or you can use, there's TLO, there's other ways to search for phone numbers. And typically, like say, Been Verified is pretty cheap and overall has been pretty accurate. It gives 4 or 5 numbers per person. And then we use a system called Textedly, and we do text messages through those. Okay. So you build.
So you're not doing direct mail. You don't have a cold caller. You're just sending text messages. So
no, we do calls as well. So we have the text messages, which a lot of people will either respond or they'll reply stop, and that takes them off the list, right? But we also have a team member that does call. Now, a lot of the sourcing and such, a lot of the data type entry, you could use Upwork and find people that do this type of skip tracing, which is really what we're doing here, right? Who can find a lot of that data for you, right? And so, there's Philippines and other countries that do a great job. For our calling, we've partnered with a team in El Salvador, an individual who's been with us about a year. I've really been impressed with this team in El Salvador because he's part of a bigger team, even though we get more one-on-one with him. And the reason is they're really close on our time and, speak great English and speak, Spanish as well. So that's what's worked for me. I did have people calling from the Philippines, and that wasn't very successful. I've also have, myself, I'll call as well, and then we'll email and such. The other thing too is we can't underestimate, like, going to conferences and networking, and people like me, like, the day I own a property is a day I'm selling a property. Like, we're all sellers, even if the strategy is a 10-year long-term hold, et cetera. Like, building those relationships and going direct to syndicators itself, just through the conferences, is always a great way to buy off market. The other way is talking to your property management company. Your property management company, and the ones that you're hopefully networking, building the team around, they're managing assets that may be struggling or may be up for sale because the cycle of the real estate for that particular asset is becoming available. So we get a lot of leads as well from our property management companies, in addition to the brokers, right? TREP is another good website. You got to pay for it, but you can find data that will show properties that may be hurting on their debt service. And so using data like that gets you closer to properties that are going to be more open to selling as well. So a lot of information just there, but it's definitely a lot of hard work. It takes a lot of time. It's definitely faster. I agree with you, and maybe a lot more productive going directly to brokers. And I do that as well, but we also really try to find the blue oceans for just that one opportunity, a year, where we're able to close a transaction without going, through the market pricing.
Yeah. Thank you for running through all that. Very, very informative. And for the listener, obviously, like Wayne said, it's work, right? Like, and of course, every part of this business is work, but and your story is proof of what I know to be true, which is that what this game that we're talking about, the direct to seller marketing game, as my friend Sterling White says, it requires world-class follow-up and persistence and patience, and sometimes 2 years worth of all of that in your case. So that's a remarkable story to me, because it wasn't like, hey, check back with me in 2 years, or let's stay in touch for 2 years. I might be ready to sell then. It was like, no, I'm not ready to sell. And, you're not close enough on numbers here. And you just created the friendship and stayed in touch. And, that's creating a yes out of a no, which is amazing. And, it's just a testament to this whole idea that you have to stay top of mind, and you have to stay in touch, and really, like, whatever excuse it is to just touch them, right? Like, sending them a silly gift, or, some sort of text message with a value add, or an email with a value add, or, just whatever, whatever it takes. I'll go ahead and pump my, well, actually I won't. It's kind of a little different thing. I was going to recommend a book, but, so the flip side of this is broker relations. And you mentioned that you are getting to know brokers better and better. It sounds like you're getting to know their families. Like, that is getting in deep, and that's really the key to success in broker relations. Talk a little bit about your systems and processes in the broker relations realm.
Yeah. So again, we're heavily focused on 3 markets: Austin, San Antonio, and Houston, and really that Texas triangle. So, if there's a property in Waco, we'll definitely be open to it, or Bryan College Station, anywhere within the Texas triangle. But primarily, we like to stick with Austin, San Antonio, Houston, or areas that have a population over 100,000. That's so already having a pretty defined scope and area makes it easier for those type of broker relations that you're asking about. Right. Because really, you're going, one, you meet them at conferences, but over the phone or email, et cetera, and just having lunch and, getting to know them. One thing I love about Texas, it doesn't, the conversations here don't start with, what you can do for me. It's what I can do for you.
Yeah.
And it's also relationship based. When I lived in Washington, DC, I'd go, this was my early 20s, I would go to some of the bars and, just try to make friends, right? I was new to that area. And every one of them, especially in Washington, DC, would always be about like, so what do you, it's all about like, what do you do and what can you do for them? But it was in a way that wasn't like building relationships. But then you come to Texas and it's sort of like, hey, I don't really care what you do. I want to get to know you as a person. And then from there, we can have further those type of conversations. So all that said, it's really just getting to know them as a person and just, seeing what they're interested in and, and this is all relationships. It's not overcomplicated. Everything, whether you're buying direct from a seller or, having those type broker dialogues, Facebook makes it super easy to follow people to see, when they're buying their house or when they have their kid and stuff. And then just checking in and, congratulating them on their successes, and, being there if they, are struggling. We're all human and have ups and downs in careers and life, et cetera. So, there's not, I've had brokers that we've stayed in touch, since I first started. And I remember those brokers who, I went to a conference and I didn't have any deals and I was just starting, but yet they gave me a time of the day and, stayed in touch. And, those are the people that I look back on and be like, okay, I want to do business with them. And the ones that, were arrogant, were working with the big celebrity syndicators out there and didn't really feel like they needed to talk too much with a starter, I remember that as well. So, at the end of the day, it's building those relationships and being loyal and taking care of brokers and the sellers, it's, I'll tell you an example. So that was the 101 units that took 2 years. That was a success on many, many levels. That seller has reinvested in several of our deals since nice. As a passive investor. Yeah, that's sweet. And that doesn't always happen like that, but it does. These off-market deals do happen. And if you think about it, if you do one every 2 years that are completely off market, like these are multi-million-dollar transactions. You talk about life-changing for a syndicator, a sponsor, if you're buying right and in a strong market, then, you have the ability to make your investors quite a lot of money. And if you can make your investors quite a lot of money, you're going to do well because those people are going to want to reinvest in your syndication and your sponsors, which all in all, grows your wealth as well. Yeah.
So well said. Lots to unpack there. One of the things that you were hitting on, real profoundly is this whole idea of a transactional relationship versus a relational relationship, or a transactional culture and, kind of business ethic versus a relational culture and business ethic. And I would say, for me, I hear you talking Texas and how Texas has, the relational aspect first. I would say, I've been to Texas, but not ever lived there, and we don't own property there. To me, this industry, the commercial multifamily industry, is a relational business for the most part. Now, are there transactionally related people out there, brokers? Yes, of course. But the overwhelming culture, I think, inside of our industry is, here's what I can do for you. And here, how can I add value to you? What are you up to? What are you doing? What do you like to do for fun? By the way, listeners, write that down right now. What do you like to do for fun? That question is gold. Like when you're getting to know somebody and you want to show them that you're interested in them and who they are, and you're interested in them as a person authentically, try to find some common shared interests that have nothing to do with business. And people love talking about their hobbies and what they love to do. So that question just goes a million miles in my book. I use it all the time. And I really mean it when I ask it, because I want to know what people do for fun. I think life's fun, right? Like hook me up. I want to know, like, where's the fun? Or what was the last great trip you took, or what are your kids up to? Are they in sports? Are they, what are they doing? That sort of thing. That, like, those questions, like, go so far in building these relationships. And this really, really is a relational business. And I've said this before on the show, but I had a coach in 2007 say to me, Tate, life's just a series of conversations, man. And if you think about it, like, everything that happens in our business happens inside of an interpersonal relationship, usually inside of a conversation of some kind. That could be email or text, but that's where the rubber meets the road, is in two people often relating to each other and getting things done together. So the more masterful that we all can be at the interpersonal relationship game, the better off we all are. And you can do this if you're an introvert. You can do this if you're an extrovert. Like, you can be like, it's all about being authentic in my book. Like, in my opinion, like, that's the gold right there, is the authenticity, the genuine sense of being interested and caring about another human being, and knowing how to show them that you care and tell them that you care. So that's awesome stuff, man.
Yeah, and I do tend to agree on the multifamily and really commercial real estate. It's a team sport, and people tend to have that mentality. Outside, but you do have different cultures and different, just the way the Northeast sometimes can be more less conversational and such, right? But sure. That's not saying that's real estate in general. Just what I had experienced when I was in Washington, D.C. And it just goes back to say that get to know the person, exactly what you said, get to know the person. And then from there, business can flourish. Right?
Absolutely.
And then you take care of them. Like, it's common sense. Like, if a broker brings you a deal and you close on that deal, that broker should have the opportunity to sell the deal when you're ready to sell.
100%.
Like, that's it, it's just having that common courtesy. It doesn't happen as often as we would think it does, but it needs, that's when you really have a long-term mindset and, keeping, people successful, on the way.
Yeah. Wayne, we're running up against time here. I want to ask you just real quick, kind of, it's something we haven't talked about at all yet today, but capital raising, for you, is there a magic bullet in your company and that you might share, or is it just a lot of things with being successful in capital raising? So
consistency is key. We are consistent in that we send out through our active campaign newsletters every other week.
Oh, wow. That's a lot. Yeah.
We consistently do that. We consistently stay transparent in our financials of our real estate holdings. The same management report that comes to us monthly from our property management teams is what is sent to those investors on that deal. We don't remove the general ledger or remove the income, the delinquency reports. Like, that package is transparent to everybody. So what that has done is it has brought many repeat investors, and the checks do get larger, which from a fiduciary standpoint is exciting, but it's also scary at the same time, because you're taking on more of their diversification within their real estate portfolio. Yeah. On the flip side of that, it's a huge honor and, again, fiduciary responsibility to have that opportunity to do that, right? And of course, real estate is a risk. There's, the returns of yesterday are much harder today.
Yes.
In this environment, right?
For sure.
But the consistency, the ability to see repeat investors continue to invest, even, and they're very quick to do so, and they're one of the first to wire their investment and sign the PPM. That is a winning strategy of long-term success, because they see the transparency, they've seen the success, from what we are doing, which is a huge compliment to our team, and we're extremely proud of it. We do a monthly meetup. Tonight it's August 28th. We're going to have a monthly meetup. We're bringing in somebody from Madison Specs to talk to us about cost segregation. We have tax professionals that join us. We have other syndicator sponsors. We had Quest Trust talk to us about solo 401ks and self-directed IRAs. There's a real, and you're doing it through this podcast, there's a big focus on educating investors. We heavily educate our passive investors. I mentioned our passiveinvestorcoaching.com program, but we also, that's a paid program, but we also have, again, through the blogs and the podcasts that we also host and the meetups, et cetera. It's all about educating and building those relationships. The last thing I'll say, because I know it was a quick question, don't get behind just on email. Don't let emails be your source of communication. Pick up the phone, call, check in, even when you don't have a deal, right? It's just that continued, because people's investment strategies change over time. Right. I have 2 deals right now. One deal, I had an investor who recently invested in another deal in that same submarket. And I just had the conversation. I was like, I don't know. I mean, are you sure you want to invest into the same asset class in the same submarket? This one may not be the fit for you. Like, most capital raisers are looking to raise capital for that particular deal, not dissuade somebody from joining that deal. Mm-hmm. But if you have the relationship and you have the clear idea of like what their risk tolerances, et cetera, then you're able to, show those investors that you genuinely care and not making this more of a transaction. You're putting them first. So a lot to unpack on all that, but consistency, relationships, going back to relationships, the key piece, and, the follow through on success to, brings the repeat investors.
Yeah. So good, man. Great stuff. Wayne, Courreges, what, remind us again how listeners can reach you.
Yeah, check out www.CREIPartners.com. There is, again, a lot of content, and you can join our investor club through there. There's also our passiveinvestorcoaching.com program that you can link through there as well. You can always reach out to me by email, wayne@CREIPartners.com. There's no, everything is I'm going to say passive with me, but it's very again, relationship based. We want to make sure it's a good fit for you to invest with our investments and vice versa, right? So we want to have those relationships, and we just appreciate the opportunity to build the relationship and just see where it goes from there. And that includes you and I, Tate. I'd love to see what we can do to partner together. Yeah. And I'm going to ask you the question, maybe not on this podcast, but afterwards, what do you do for fun? I genuinely care, and love your, Salt Lake City background. I was in Provo, a couple of years ago for a wedding, and just absolutely beautiful. So I understand why you put your roots there a little bit.
I do. A lot of what I do for fun is Utah, man. I ski a ton, bike a ton, hike, camp. I was just camping this weekend out in Ely, Nevada, mountain biking and
Moab, Canyon Lake. There's so much.
I spend so much time down south in southern Utah. It's like another planet down there. I just adore it. So awesome, Wayne. Thank you so much. This has been just tremendous. Lots of good value here. Listeners, I hope you got a ton of great value out of this as well. And check Wayne's website out and, be inspired, right? Get inspired by people that are doing these big things and that are doing them well and doing them right. So on that, thank you, Wayne. Thank you, listeners. And we will see you on the next episode of The Apartment Gurus. Take care, everybody.
This has been The Apartment Gurus with Tate Siemer. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of The Apartment Gurus.